at the end of a credit supercycle that began, depending on your point of view, in 1913 when we founded the Fed, or 1971 when we went off the last vestiges of the gold standard. And either way, really long time, massive amount of imbalances have been built up. And so chaos is kind of unavoidable. And we're kind of entering the death spiral part of the process where the world's fiat currencies start to blow up on us. And it's very hard to predict exactly how that's going to look, right? Because this is global, first of all, where currency crises used to be country specific. One country would screw it up and have a collapse and have to go back to the gold standard, but everybody else was on the gold standard while that happened. This time around, it's different because everybody has a fiat currency. Nobody is on a commodity-based financial system or anything that relates their currency to something real. And that means it's going to be much bigger when this thing blows up and much more varied. There are all kinds of things that can happen, from war, which we just barely avoided in Ukraine here. We were almost in World War III, to hyperinflation, to deflation. Anything can happen when something like this really starts to go. And the highest probability scenario is that interest costs start becoming debilitatingly high for governments now because they build up so much debt and they have no choice but to really dramatically inflate away their currencies. And that leads to prices going up and currency values plunging. And in other words, we get something like 2022 when we had double-digit inflation in the US for the first time in a generation, only on steroids, much bigger, much more chaotic. And in the financial markets, it's hard to know whether that's good or bad for stocks in general, right? Because they're financial assets, which should be really debilitated by the kind of currency crisis that we're heading for. But at the same time, inflation makes the price of lots of things go up, including stocks. So the stock market might do well, or it might not do well, but probably will do very well as real assets while all this is going on. In other words, energy assets and precious metals like gold and silver and uranium, things like that, farmland, things that governments can't make more of out of thin air, will tend to do really well amidst the chaos. But it will be chaos, Political, maybe geopolitical, certainly financial. All of that stuff is coming as we try to deal with all the debt that we've taken on that we cannot pay off to save our lives now. Well, as Doomberg likes to say, energy is life. The oil price is hugely important because it's in everything. If you're a farmer that's very energy intensive, you need to probably put petrochemical related fertilizer on your crops, and then you need to run gigantic machines in order to harvest the crops, and then you need to transport the food to grocery stores. So food system, which most people focus on when they think about inflation, is hugely energy intensive. So if oil prices go down, that's deflationary. And oil, being a cyclical market, tends to go down during recessions. So we're kind of heading into a recession. So it wouldn't be a surprise to see the economies of the world slow down dramatically and energy use drop. And at the same time that the US is producing more and OPEC is producing more oil. And so we could see oil drop dramatically. It could drop more from here. And it could be structurally low for a while just because of massive supplies. The US was becoming an energy gigapower. We were making more and more every kind of fuel source. And we're not going to slow that down at all, it looks like. The Trump administration intends to turbocharge the process of getting more oil and coal and natural gas and maybe uranium. So that could lower energy prices for a while here. And that could give us what looks like deflation in the next couple of years. Here's one scenario as that plays out. We have a recession. Energy costs go down, especially during the recession. So, it could be that we even have zero inflation for a little while. And that spooks the central banks of the world big time because you cannot have deflation in an over-indebted system. So they will panic cut interest rates and we'll go back to where we were for a while. They're like 1/3 of the debt in the world had negative yields. And we go back to that, but maybe again on steroids, maybe even more so. That in turn becomes inflationary because it makes the currencies of the world worth less and less as interest rates drop into negative territory. So we have a period of slowdown, recession, maybe deflation, followed by a burst of inflation because interest rates are being pushed down to naturally low levels again, and governments are running big deficits to lean against the recession. Maybe that is the death spiral for the world's fiat currencies because we're working with massively more debt now than we did in the Great Recession. And it could be that that's just too much debt to inflate away without just blowing up the world's currencies. And so we finally get the currency reset that Jim Rickards has been talking about for a while. Then it becomes a really interesting debate about what form that should take. Is it going to be a Bitcoin standard, or will we go back to a gold standard because it's understandable and the world central banks are kind of leaning that way anyhow by buying huge amounts of gold lately? Or do we go to some other kind of commodity-based standard that's a mix of different things like oil and uranium? And I don't know. I think we'll debate where we go when we start thinking in terms of a currency reset. A new Bretton Woods agreement. And I suspect it's probably going to be a new gold standard because that's understandable. We had a gold standard for 200 and some years. And the best part of it was called the classical gold standard. That's how we refer to it now because it really worked. The monetary system of the world was very stable. We actually had modest deflation each year as workers got more productive. And we had massive investment around the world. We had kind of a globalized system back then where basically anybody could invest anywhere because everybody was on the same currency standard in effect by linking their currencies to gold. So we could point to that and say, well, let's just do that again, and a lot of people would get on board when things are especially chaotic. As a gold bug, that's the best scenario for me. I would love to see what price they come up with for gold when they start really running the numbers to see what price gold has to be to fully back a world of tens or hundreds of trillions of dollars of paper money floating around out there. It's expensive to take a factory that is running in China right now, let's say, and relocate it to Tennessee. That's inflationary two ways because we have to buy a lot of raw materials and hire a lot of people to build a big factory. And then we have to employ a lot of people at good union wages that will be, orders of magnitude higher than what people make in some other parts of the world. So we would probably get an element of wage inflation in this scenario. And this is a real scenario. It's coming. Lots of companies around the world are relocating factories to the US. So this is happening. And if we're going to hire enough people to run these big chip plants and these natural gas refineries, things like that, we'll have to pay up, right? Because right now there aren't probably enough people in the US who have those skills. So we got to educate them and then we got to pay them really well. So we'll have wage inflation. And the Fed hates wage inflation because they don't care if stocks and bonds and real estate go up because that enriches the people who own the Fed and run the Fed. So they call that asset prices rising, but they don't count it as inflation. But if a bunch of guys who are working at Walmart right now go over to a chip plant and get 3 times as much money, they call that wage inflation and they consider that to be a bad thing. So the Fed will be under pressure to raise interest rates because of that. But they'll also be under pressure to cut interest rates because of all the financial insanity that's happening when the US government interest costs on its debt start approaching $2 trillion a year. That's a catastrophe. And the Fed is aware of that and watching it. So they want lower interest rates, and everybody else wants lower interest rates too. Remember, we have a real estate developer as the president now, and real estate guys love low interest rates. So he's going to be publicly pressuring the Fed to cut interest rates. We'll see what they do, but these are going to be very powerful countervailing forces. And it's going to be incredibly messy because if you have wage inflation that pulls overall inflation up to 5%, let's say, which is totally conceivable in that kind of a world, that means your currency lost 5% of its value that year. So you've got inflation that, if it continues at that rate, will threaten to become disorderly. And just currency falls off the table. So you get, the crack-up boom for the Austrian School of Economics, where everybody just gives up on the currency. And that's a real danger. But at the same time, you can't raise interest rates to protect your currency without causing interest costs for all the world's major governments and a lot of big corporations from going through the roof and just blowing up all these systems. So we're in a box that we can't get out of at that point. To digress into politics a little bit, I really like a lot of what the Trump administration is trying to accomplish here. And the idea that they're going to be engulfed in this chaos is a really bad thing. There wouldn't be poetic justice in any way because they didn't cause the problems that they're having to deal with right now. So hopefully they'll be smart enough to do a currency reset sooner rather than later. Just get it out of the way, put up with the short-term trauma that it causes. That's not a pipe dream because Trump has a lot of people around him who sound like gold bugs. He's got people talking about, we'll issue 50-year bonds backed by gold, or we'll do something else like that. You get those guys into a room in a really chaotic time, and maybe they come out with a new gold standard where they just say, okay, from now on, the dollar is just a word for 1/10,000th of an ounce of gold. And then they go on from there. That wouldn't be pain-free because everybody who trusts rest of the government would be screwed over by that monumentally, but it would let the country go forward with a sustainable monetary system. So you get through the immediate chaos and pain, and at the other end of it is something that is workable. The other alternatives are so horrendous that it's possible that the government is willing to give up the ability to create money out of thin air in order to go back onto a system that will prevent a civil war or prevent World War III or whatever that we'd be looking at that time. So that's a good scenario for Donald Trump. It means he's the Winston Churchill of our time, and I would love to see that if it turns out to be possible. The U.S. didn't have negative interest rates, but Japan did, and Germany did. They each have different problems. Germany is terrified of financial instability because they lived through a hyperinflation. And Japan has so much government debt relative to GDP and per capita. They understand that rising interest rates are an extreme risk for them. That could just blow up the Japanese government's finances. So they both cut interest rates really dramatically. The U.S. is heading into a stage of their financial evolution when it's kind of like that. Let's say we kept interest rates at 5%, which is historically a little on the low side, right? It's not even high interest rates. It's just high for recently. We kept interest rates at that level. That means we've got $40 trillion of debt that we're going to be paying 5% of interest on. I don't have the math for that in my head right now. I won't try, but it's a bigger number than we're currently paying. And it's heading up at a parabolic rate because we have to borrow the money to pay that interest, which means next year's deficit is even higher. And see, when we enter that kind of a currency death spiral, we'll be just as scared as Japan and Germany were the last time around about what's going to happen if things just spin out of control. Negative interest rates, even if they seem like a good short-term solution, are a catastrophic long-term policy. But when things start spinning out of control, governments get just as crazy as individuals do when they start to panic. So there's no reason to think that that's not a possibility. But there are lots of other things that could happen in the other direction, where interest rates just spike because nobody wants to hold dollars anymore, stuff like that. Too many things could happen that point in multiple directions all at once, and there's just no way to know how it's going to play out. So you want to just be as cautious as possible. Do things that make you resilient, and do not take really aggressive risks because you think you know what's going to happen in the next couple of years. Nobody's going to know that. Some people will guess right, make a fortune, become household names, but they will have guessed, and they didn't actually know.